All right, everybody, good evening. Hey, thanks for joining us on a Sunday evening. We appreciate it. Just before we go ahead and I say too much without testing the audio, everybody just give me a number one in the chat box if you can hear me. Should be a little chat box just to put a little message in. Just give me a number one if you can hear me. All right, good deal. All right, looks like everything's working good. All right, so let's go ahead and we'll get started. So hey, just a few things. I know this is will be relatively new to this group. All right, it's the first time I've had this group on the group webinar. So the purpose is, to go over the stocks for the week, talk about the market overall, talk about the upcoming week and what the market, what we think it's going to do, right? What it's telling us. And then to learn from each other, and then answer questions, right? So during this or at the end, whenever you feel appropriate, you're welcome to ask questions at any time. That's the purpose, right? And the cool thing is you can learn a lot from other people's questions as well, and not just your own. All right, so I'll go ahead and get started. There's a couple different ways to ask questions. You can either put it in the chat box, or since I keep these classes small, right, because I run them at different times, you can also raise hand right here. If you take a look at, see right here, you should have a little hand right on there, and I can click on you and you can actually talk. It's up to you, whatever you like, whatever you prefer, we'll go for it. But let's go ahead and get started. Let's get started talking about the watch list. So the watch list was it was slow for the beginning part of the week, but then it took off beautifully. So we'll start with number one. We'll start with GSUM, right? So GSUM's a swing, right? So first and foremost, you got to know the difference between them, right? A chart trade is your single and double. It's your account builder. It's, although it is still based on fundamentals and technicals, it's something that you want to take a short-term swing at to add a little money to the account, but not necessarily, going for the fences on these. Where swings are more, you're kind of swinging for the fences. Doesn't mean that if you strike out, you blow your whole account, right? That's not the point of a swing, but it means that you're going to have to give yourself a little bit more room on a stop loss. You should be building into the positions rather than just buying right charts. I usually just buy my entire position right out in one swoop, if not maybe two. Where swings, you kind of want to build into a position until you see that the idea is working. So GSUM's a swing. Let's talk about it a little bit. Just a few things about it. Just going to, like I told you, I like to use free stuff. All right, so Yahoo Finance. All right, keep it free. So just a few things I want to point out to you and why I like GSUM. Now you'll see on some of these foreign companies on Yahoo Finance, it is missing some information. I'll show you where to find that. Not the end of the world. But look, so here's an example of a swing. Normally on a chart trade, I wouldn't even think about touching something that wasn't going to be profitable next quarter. Let me make this a little bit bigger, or at least growing next quarter. But look, current quarter, supposed to make 8 cents. Next quarter, down to minus 29 cents. So you kind of have to think, well, why? Why is that going to happen? So we'll talk about that a little bit. But overall, here's what I'm looking at for swings. A little bit more long term is that losing 49 cents versus swinging to a profit of 35 cents a share. That's a big, big swing. So I told you that Wall Street loves a swing to a profit. So if a stock is losing money, aka minus 49 cents, and then it goes to positive 35 cents, that is more impactful than, let's say it was making $1 a share and it went to $1.35, right? So that's a 35 cent or whatever the equivalent is, $1.70. That's still great, right? That would be great. But swinging to a profit, going from a negative to a positive, is one of the most exciting things for value investors and growth investors. So just kind of keeping that in mind, looking at the revenue, right? Look at these revenue estimates. $99 million, next year $155 million. That's almost a double, right? It's, you know, about 60%. Pretty awesome. All right, let me get rid of this right here. All right, show you something else too. You know, you gotta follow the money when it comes to especially swing trades, right? Because swing trades are going to be a little bit more sneaky. So you have to follow the money. So if you go to holders, and I just like to look at, okay, who's holding this company right here? Who are the ones that are buying this thing? And if anybody ever heard of this guy before? Soros Fund Management. Give me a 1 if you ever heard of that guy before. George Soros. Right, pretty good investor, right? If you haven't heard of George Soros, just, you know, take a look at him. Don't be embarrassed or anything. A lot of you guys are new, but pretty famous investor, billionaire, right? So, you know, follow the big money, right? You got Soros Fund Management, you got Wells Fargo below here, all of these owning this GSUM stock, which is you know, just right there at the top, and you know, a 7% stake. Right there's a pretty healthy stake when it comes to a small company like that. Right, and let me go ahead and erase these right here. Going down, looking at some mutual funds that own it. You know, you kind of got to get familiar with who's the, you know, who are the big funds on the block and who are the big people on the block. So, you know, if you hear Dryhouse, like Dryhouse is a huge fund. Wells Fargo, obviously everybody knows Wells Fargo, right? So you just kind of, you know, and if you see someone there, just go ahead and Google them, see what comes up, see what it's showing you. You know, BlackRock's big, right? So this is just kind of following the money and seeing where the big smart people with the billions and billions of dollars, you know, do they like this stock? And just because they like it doesn't mean you have to, but it's a data point, right? It's something to think about when it comes to looking at the stock. All right, just looking at statistics, float here about 17 million. Not much else going on in statistics. And then I'll show you something real quick. So sometimes the foreign companies, and even if it's not just because they're foreign, but Yahoo Finance is just straight missing all their information, or they're only reporting a portion of it, or you're missing it, or whatever it might be. So, you know, you can always go over to FinViz, type in the stock, go right here down to statements. And it gives you all the information you need. All right, so this is, let's take a look at the balance sheet. As you see, 258 million in cash, or 258,000, I'm sorry. About 1.2 million in current assets. Current liabilities about 657,000. So, you know, about double on their current ratio, which is their, you know, short-term assets, current assets to current liabilities. So plenty of cash to be able to pay off their bills. And just looking at revenues, 98 million, 153, 100, 120, and then 151. All positive, looking pretty good there. So that's GSUM. I don't spend too much time on each particular one, but just kind of show you a few things for each. For the chart, let's take a look at the chart. So the technicals on swings are going to mean a little bit less than the fundamentals, right? Because, you know, with a swing, you're looking at more of a value, more of a fundamental kind of basis. But there are some technical, you know, cues here that you can take a look at that kind of tell you, at least give you a little bit of a heads up that something might be brewing, right? So this right here, pretty ugly downtrend, right? It's due to an earnings report that wasn't that positive. Right? You had an earnings report here that came out, which was decent. Came up, hit a little bit of resistance. Now let me show you something. So if you look here, that chart pattern right there, that's called a double bottom. Right, so, you know, being able to recognize that the double bottom, that means it came down to a support level. It established support here. And if you see, this support is higher than this support. So it made a higher low. right? Came up, made this W shape, right, which is the double bottom. You see it's almost the exact same place where it bottomed before. That means that investors are saying, okay, this stock is absolutely too good to be true at this price. We need to start buying, and that's exactly what started happening here. And then taking a look here, this is clear resistance right here, right, because you had this uptrend and then it just stopped almost for seemingly no reason. So breaking above that resistance, which it has right now, is definitely a bullish sign. Now, as you'll see, it still has some overhead resistance. So we need to be very, very clear about where that is, which it's right at it right now. So we need to, watch this stock as it continues up, and can it break this resistance area, which we really need it to break to do something noteworthy. All right, so let's go ahead and move on to the next one. All right, REDU. Let me just show you something on the chart here. So this is one of my favorite, patterns, if you will, is that you had a relatively new IPO, right? Came out, and IPOs are tricky. I don't typically trade IPOs because they're tough, right? Because even these overhyped, IPOs you think that are going to go to the moon, like a Snapchat or something like that. Like Snapchat was a failed IPO, and everybody thought it was going to be a monster. So they're really, really hard to trade until they establish some kind of basis, right? Some kind of they're out. You start to get some analysts looking at it because there's a quiet period on IPOs where analysts cannot release research reports for X amount of time. So you have to, and not saying that analysts are everything, right? Anybody who's ever taken my courses and stuff like that know that that's not, but people care about analyst reports. And when there's no analyst reports, then people don't have anything to read about the stock because most people don't know how to research, right? So you have a stock that, formed a bottom here in the 9s, right? Had a decent report right here. And then as you see, slow stochastics less than 20. And then starts its uptrend. And then I like to call it a stair stepper pattern. You can call it what you want. People do call it a stair stepper in the mainstream. So you'll hear that. If you Google that, you'll see it. But you see, you got stairs, sideways, stairs, sideways, stairs, right? And that pattern on strong stocks, right? On strong stocks that have a reason to move will typically happen 3 to 4 times, 3 to 4 stairs, right? So you'll get, that's 1, that's 2, here's 3, and then potentially another one. So what you have to look for is, if you see a stock on the watch list, and some people say, well, it's boring, it's just going sideways. Sideways is good. Sideways is healthy, right? And I'll show you why. So take a look at this action right here. You have your stair right here, and here's your range. Okay, so see how the stock is just kind of bouncing in between this range, right? Up, down, up, down, up, down. So if you're in the stock and you're setting your stop loss anywhere to where this range is going to take you out, you're setting yourself up to get whipsawed, right? If you've ever heard that term before. Right, it means that you are setting yourself up to be shaken out by the normal fluctuations of the stock, rather than for it's actually breaking the trend and show you something. All right, so if you're looking at this right here, this is it's kind of it's up and down right here where it's just kind of grinding in and grinding out and not really doing anything, and it's not at all unhealthy for stocks to do this. It's actually extremely healthy, especially after a decent sized pop right here. So you had, went from 12 to 15, pretty decent percentage return right there. And then just kind of wants to go sideways for a little while. Now, let me show you something. As this stock is going sideways, let's take a look and see what's going on with the slow stochastics. So the stochastics are going down. Now, I'll tell you, when there's a little bit of a I don't know what the right word is, a disparity or what if you will, between the stochastics. So stochastics going down, which means that there's selling pressure. People are selling the stock right here. But yet, even though they're selling the stock, it maintains pretty much exactly sideways its range. That means that even the selling pressure that's being exerted on the stock is not pushing the price down significantly, especially not enough to break any kind of technical factor. Like, you have clear support right here. This is support as it becomes, right? Because the stock just keeps bouncing off of it, but it's not breaking any of those, key areas right there. But yet the stochastics keeps going down super strong when you see that. So keep that in mind. If the stock is moving sideways or even slightly down, let's say that this was up and it was just kind of little bit down, little bit down, little bit down, but the stochastics is kind of dropping, at some point the rebound in the snap is going to be hard, especially when the snap lines up with the RSI going back above 70 as it did here, right? Look, RSI, let me give you a clean slate. RSI goes above 70 right there, and look, you get a couple dollar move. RSI goes above 70 here, and we get at least $1.30 right now. You had a $2 at its highest, potentially more, right? And we'll keep it, we'll keep it on watch. If you're not already in it, it's not, I wouldn't say it's too late to trade, although you definitely, use your brokerage tools to your advantages when it comes to this kind of stuff, right? I know, that what I specialize in, especially, is teaching people that are busy, right? They have jobs and that work, and, that can't sit in front of the computer all day long. So use alerts to your advantage. If you're looking at REDU, and set an alert right here, above this madness, and if it fires off, pull up your phone, pull up your computer, take a look at it. But that way you don't have to sit and babysit it all day long, right? Use alerts and your brokerage tools to your advantage. A little bit more advanced and risky strategy is to use an auto buy, right? Where you could set that somewhere right above here to where it would buy, but be careful with that, right? You really want to know what you're doing if you're going to use an auto buy. Any questions so far? All right, good. Let's keep on moving. All right, so CSPI, another pretty decent winner off the watch list. So let's just kind of go over it right here. Now, this one is a little bit hard to trade, right? It's a little thin. The volume's not super heavy, but as you see, it's, fundamentally, and technically sound enough to have this kind of a move. All right, so check it out right here. Look, RSI above 70, and see how this RSI just hangs above here for quite some time. I love that, because if that happens, that creates a bit of a muscle memory, and it can happen again and again and again and again, right? So, history repeats itself because traders have memory, right? And traders will look back and say, well, this stock did this before when a particular thing happened, right? So if that particular thing happens again, sometimes, self-fulfilling prophecy, and it can happen again. The only thing that was kind of crappy here is that, if you didn't get in the stock when I was first adding it to the watch list somewhere around here, this 2-day pullback was healthy. This right here might have scared you out a little bit. So if you, were in the stock and you sold it here, can't blame you there, right? Because that's a pretty big dip, especially for a 1 day. But, remember, most importantly is, from a stock perspective, it is better to watch only a few stocks and watch them well and trade them well and make a ton of money off of them than to feel like you always have to be finding new ones, right? Because finding new ones is fun. It's exciting. You want to, but it's not necessarily going to make you the most money, right? So sticking with, the old faithfuls, or the ones that you've already done the research on. And, maybe if, let's say you find, this is just an example. Let's say you find this stock, say this was here and you found it here, and you look at it and you're like, man, earnings look good, everything looks good about this, but it is, $2 above the 4-day EMA. That is not the time to toss it out and move on. That's the time to add it to the list and then keep an eye on it for when this pullback happens. Right? Because as you see, the pullback happens. Once it starts to go RSI 70 again, it's nothing really but uphill from there. And look, you get almost a $3.5, $4 move right here. Relatively easy, little risk, not a lot of dips below. Pretty sound trade right there if you can pick that up when the RSI goes back above 70 right here. So just something to keep in mind, right? That you have to keep these things on the list. Swing trading is not all about the day-to-day and the hour-to-hour. It's about, finding something awesome and then looking for the opportune time to take advantage of it, and using your skills that you've learned to be able to execute that. So, trading, I'd say trading in range, right, is probably one of the biggest things that get people, is that if there's nothing going on, like right here, the RSI on the stock is not above 70 and the slow stochastics is not below 20. If it is not either one of them, I don't even want to touch it. That doesn't mean that I'm not going to watch it for when it comes back to that, right? But I don't want to touch it because there's nothing telling me that the stock is either heating up or the stock is oversold, as shown by the slow stochastics, going less than 20 and then starting to rebound, just as seen by an uptrend. So if neither one of them are going on, I'm not going to trade in range, because that's an easy way for you to set yourself up for a whipsaw, right? It's an easy way for you to set yourself up to get shaken out of the stock for no reason when you didn't have to, when all you had to do was wait, right, for the technical indicators to show you that, this right here is called the gas factor, right? RSI, right? RSI, like I always say, traditional people will tell you RSI over 70 means it's overbought. And that you should be selling it. Well, if I listen to that, then you would miss moves like this. You'd miss moves like this, right? But, GAS, the gas, when this turns red, when it goes above 70, right, is the give a, and I think you know what that means after that, right? That means that people are starting to care about it. That means that there's buying compared to the rest of the market. It means that this stock is outperforming. That means that, the amount of money flowing into it is higher than the amount of money flowing out to it, and this, that, and the other, right? So that, wait for that. Wait for the technical indicators to tell you that it's worth buying, right? Either that it's oversold with slow stow less than 20, or that it is ready to potentially make some kind of run because the RSI is there, right? DZSI, kind of a similar pattern, right? If you'll see, a lot of my stocks are the same pattern, that's okay. I trade boring, and boring makes you money. Exciting doesn't necessarily make you money, but boring can make you money. So look, stairs, right? Kinda right here, kinda. It would have been awesome if DZSI held its gain right here. Right, but there was just a little something telling it that, okay, this is too much for this day. Now, I love this volume day. I love it, right? I love it. I love the RSI going above 70. So let's say, for example, you set yourself an alert for right above this range, because you saw it come up to here and now it's slow. Same thing, right? Trading range, and bam, your alert goes off. So, clean this up. Your alert goes off right around here. 4-day EMA is about 9.5. And let's say you take a position and you're at about 975. Maybe give yourself a little breathing room below the 4 MA. So let's say your stop loss is about 40 cents below, right? Now, what I like to think of in times to take partial profit or full profit is a little bit tough in swing trading sometimes, because you want to find a perfect balance between letting your winners run, but not being greedy and taking profit at the right time. So here's a pretty good way to think about it, is that if this stock, popped all the way from 9.75 to 11. Right, so it was up about $1.25 that day. If you wouldn't buy it here at 11, meaning if it's too far above the 4-day EMA for you to make a purchase here, then you should be taking partial profits. Right? Think contrarian to the rest of the market. Think the opposite of the regular retail trader. Right? If you do the opposite of what you think every other person, and I don't mean institutions and the smart money, but the individual people out there are doing, for the most part, you will do fairly well in the market. Right. So if you think about it, a lot of people were probably thinking buy when this popped up to here, right? Because people chase, and people will chase stocks all the way up to infinity. And I'll show you a perfect example after this. But if you're at a point where the stock is high enough to where you wouldn't buy it, meaning the difference between where it's at in the 4-day EMA, then it's probably at least a good time to sell a third to a half of your shares. And as you see, it looks like it's gearing up for some more, which is okay, because say you sell half, you lock in a good chunk of change, and then you don't sell the rest until the stock breaks the 4-day EMA and closes below it, right? So this doesn't count. A little dip below doesn't count, especially if the dip isn't breaking down here below, right? Your position was coming in around right here, so you could set that as the stop loss for the other half of your money, right? So you could always, after this big pop, if this was your entry, you can make that your stop loss, right, for the rest of your money, but then kind of letting this ride. Now, when this gets back up to, the $11 area, you got to watch a little close. So, if you're working full time, maybe set an alert somewhere around here. Because when it gets up to 11, you're going to want to see if it rejects or not. Because if it rejects 11 and doesn't break past and make a new high, then it's going to have some trouble, right? We call that a double top. Just like we showed you a double bottom, that would be a double top, right? Kind of bam, bam, right? Double top. That's a bearish sign, and that should kind of tell you that I don't know. This, people aren't really thinking that this thing's worth, more than $11. Right, so just kind of a good way to think about that. Let me get clean here. All right, HDNG, weird, right? Almost the same pattern. As you see, just kind of an uptrend here. Didn't find it anywhere around there, but once it goes here, RSI 70, look, boom, 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 right? Same thing, same pattern. So no need to kind of beat a dead horse, but just something to show you that the pop and then this sideways. I love sideways, right? Because people forget about stocks when they go sideways. Most people do, right? So nobody's really thinking about this after this big day. And it's, look, big volume, big day, RSI is there. It's beautiful. But when it's just doing this, a lot of people aren't thinking about it. So this is a perfect time, especially, not maybe necessarily this day, but as these days get closer, and the 4-day EMA gets closer and closer, your risk becomes less and less and less, right? Because your stop loss should be a little higher, a little higher. You see the RSI is just keeping strong the whole time, and then when it starts to tail up here on this day right here, you can kind of get a little bit of a prediction that maybe something's going to happen here. And look, had a fantastic day on this one. So just a little bit of way to read the chart there on HDNG. All right, LE's not really doing a whole lot of anything, to be honest with you. So, I mean, it's still, I still like the story of it. I still like the, everything going on with it. Obviously, this was the time, right here, big run up here. You had a drop, slow stow 20, so you could have picked up a little bit here. But what I really would like to see is this thing come up and break past this resistance level. Which would have been awesome. So that didn't happen. That doesn't mean the show's over, especially because if you look, you have a low here, and it's healthy, right? Healthy low. Look at this run. up from 12 to almost 20 bucks. That's an $8 run. So when it pulls back to 18, it's down $2. That's nothing, right? That's nothing. That's super healthy, especially look, relatively shallow pullback from 20 to 18, but yet the slow stochastics goes all the way back down to 20, which should tell us that it's due for a little bit of a grind, a little bit of a pop. Now you get one here. I would have liked to see this continue, but the thing that tells me that the show isn't necessarily over by any means is that you have your low here, and then looks like your next low right here. So you get a higher low. So it may stay in this range for quite some time. But as long as, look, slow stochastics are still pointing up, RSI is pointing up. This RSI gets back up to 70, it should pick up some heat. And then I really like to see it break above this resistance of like 20, 50, right? So that's kind of how you trade LE. All right, WSCI, little bit of a kind of a choppy one, kind of a thin stock, so not for everybody. Remember, the watch list, you have to sort the watch list out to what you like, right? So if you don't like biotechs, if you don't like really low float stocks, if you don't like whatever it might be, right, you gotta put that out of your mind. So if you see it come on a watch list, you say this stock isn't for me, that's okay. There's nothing wrong with that, right? Because biotechs are a whole different animal in themselves. They kind of have a mind of their own. And then some other stocks, they just trade different. But so let's take a look at WSCI. Awesome RSI run right here. And then look, basically a pullback. And the pen's not working. Hold on one second. There we go. Basically a pullback right here. And slow stochastics less than 20. So as the slow sto starts to point upwards, as you see, it's down, and then I'd like to see it come back above 20, get a close above the above the 4-day EMA. But this is back in play now, right? Definitely back in play with a stop loss. If I were setting a stop loss for this, it would definitely be right around right here at the bottom of this low right here. Now that it's formed it. Anything below that, I wouldn't give this stock much room. Right. So it's either got to come up and make a run up into the 650 area, or if it falls below this flat level right here, then I'm done with it. And it's kind of over with. Because once a stock goes slow sto 20, comes back up, and it makes a high, but let's say the high is right here, a lower high than it did before, that's kind of a bearish sign. And after that, I'm not really too interested in trading it. All right, NXEO's been just kind of a solid grinder, kind of, little down over the past week, but just kind of grinding up and really just kind of maintaining above the 4-day EMA. Looks, kind of similar, right? Similar situation here where the RSI is hot. Right here, you see it's starting to point back up, so potentially could start to get another run. Going to meet some resistance here around the 1013 area. But look, the slow stochastics is dying off hard, which means it's getting some selling pressure. But the stock isn't really dropping, right? So again, another bullish sign. KMPH, that was a new watch list ad on Friday. Had a decent day. Unfortunately, it gave back most of what it was looking to do, right? So it had a nice little pop up from its open at 566, about 60 for 50 cents up to 610. So, if you took a position in this and didn't take any partial profit at 610, I mean, can't really be too upset about that. I mean, but just think, if your stock's up 10%, probably at least a time to take at least a third off. So you can lock in some money and then kind of guarantee a profit on it, especially on biotechs, right? Biotechs are different. You have to be a little quicker on the gun with biotechs to take profit. You have to keep your, little bit more, closer watch on them, a little tighter on the stops, right? Because biotechs can eat your lunch if you don't know what, what you're doing with them. So biotechs are all about what drugs do they have in the pipeline, what is the status of the FDA approvals, and then how much cash do they have, and can they survive, right? And even in some points when they have plenty of cash, if their stock goes up significantly, they may take that opportunity, even if they have cash, to raise some money, unfortunately at your expense, right? So you have to be a little bit more careful with biotechs, right? You take profits quicker, play them a little bit smaller. You don't hold biotechs for the moon, because they can fall just as hard as they go up, right? So just keep that in mind. UTSI, not much going on here. I mean, look, you get a low, you get a lower high, but then you get a higher low. So it looks like it's just going to kind of maybe be stuck in range for a little while. So I would personally wait for some kind of action. I'd like to see it trail up. I'd like to see our indicators show us something. I'd like to see it come up to the 650 level. And I probably wouldn't even trade it until it broke 650, because you've got kind of let me get some. You got kind of a perfect double top right there. So that's bearish for me. So I don't really want, like I said, I don't want to trade it in the middle of anything. I don't want to be stuck. Number one, I don't want to have a bunch of money out in a stock and just be it going sideways. That drives me nuts. So wait for something to tell you, all right, now's the time. All right, and there's nothing about this that tells me now's the time. Grinding up to the 650 with RSI coming up above 70, and then breaking that resistance area. Well, that would be telling me something. But right now, it's not really telling me anything. All right, Kodak. I don't particularly like putting blockchain plays on the watch list, but I don't mind putting it on if I think they're half legit. All right, so they're every company out there, and if you're not familiar with blockchain and cryptos and Bitcoin and Ethereum and Vergecoin and the million other ones that are out there, that's okay, right? And I don't teach that, so if you need that, you're interested in that, I can make some recommendations, but that's not for me. But when I'm half smart enough to recognize a trend, right? So when it becomes hot, right? So Bitcoin and cryptos and everything are hot right now, no doubt about it. So when a company releases news that they're going to start to get into that business, my initial thoughts are I'm super skeptical, but I know how the response is going to be. I know that people, that the stock market has been responding to that lately. So if you look at a couple examples, Riot was a huge, $14 up to $46 on blockchain news. This used to be BIOP, and they changed their name somewhere around here to Riot Blockchain. So they were a biotech that turned to blockchain, and then the stock, quadrupled, tripled, whatever. So that should kind of tell you, like, that's a little shady, right? We're a biotech, all of a sudden we're a blockchain company, and we're just going to change our ticker. That should worry you. And I'm not saying you can't trade it, right? That's the last thing I'm saying. But don't bet the farm. Don't get married to it, right? Date the stock. Don't marry it. And be taking profits quick. And I'd be hesitant to sleep on anything that was a little shady and stuff like this. I like to stick with plays that have a high probability, hence the name of my company, right? But just looking at a couple different examples, look, DPW is one of them. Big up, big down, right? They fall just as hard as they go up. Now, why did I have any interest in Kodak? Well, number one, because it's Kodak, right? It's a reputable company. So when they say that they're gonna do, they're gonna make their own coin and start making, coin processing or coin mining, I think it's called coin mining equipment, you could kind of bet that they're not completely full of crap, right? Because, you have a company that literally has a whole lot of other stuff at stake if they're lying about this, right? If this is all a sham, like it might be with DPW and Riot and all these other companies. Well, if somebody, kicks them off the NASDAQ, it's not going to be the end of the world. If somebody stops buying Riot blockchain, whatever they sell, which is probably nothing, right? then it's not going to be the end of the world for Riot. I'm sure they don't want that, but they'll figure out a way. But if Kodak loses their reputation, people stop buying all the stuff that they buy. Probably not a good thing. So, just thinking of Kodak as far as, a little bit better reputation than the rest of the blockchain plays. And let's take a look at some other stuff. Float 22 million. So you have a fairly reputable company with a name, with a brand name, 22 million in the float. That's announced some news that you can kind of, if I were betting a paycheck, I would bet that it is true and they're not completely full of crap like some of these other companies. So then what do you get after that? Just how to trade this. Can you trade it on this day? Yes, you can day trade it on this day. Absolutely. There's nothing wrong with that. But if you miss that, and that's okay, right? Can you trade it here? No, absolutely not, right? There's no way to trade this successfully and have any kind of risk basis or any way to really, follow your own rules and set yourself up for success. After this, I mean, this is just a huge run up overnight. After hours, the stock was just going crazy. So how do you trade it, right? Is you wait, right? You give yourself a better opportunity for a better entry, for a better risk basis, right? So you wait for this pullback, right? And then you see, look, the 4-day EMA catches up. They kind of touch right here. Oh, and then look, at the same time, the RSI starts to trail up. It goes back above 70, and that's a perfect time to take an entry. All right, so do you guys see where all that kind of comes together right there? All right, so you get the J, right? Call it the J pattern, hopefully a J, right? I call it a J because I want it to go higher than it did before. Right, but as you see, the 4-day EMA comes, catches up, it touches right about there. And at the same time, you had the RSI dip below 70 and came right back above, right all where this lines up right there. And that is not meant to look like a pitchfork. But so sorry about that. All right. Okay, moving on to the next one. Vuzi, yeah, just kind of sideways, not much going on with RSI or anything right now. So really kind of just watching it, right? No interest in it. It did form a bottom right here, which is well above where this day, big day was. So you got this gap right here. So that looks to be a little bit of strength right there, but I'm not really interested until the technicals are showing me something. And then Mark got a ton of good feedback on this one. I'm glad you guys made some money. I think that's awesome. Right, but very, very similar with what's going on with this, right? RSI above 70 here was, in the $3 is where we were recommending it. And then up. Right, so, in range for a little bit of while right here, which is okay, because after a big run up like this, that's all healthy. But then kind of look what I was talking about earlier, is that you had a relatively shallow pullback with a really massive dive in slow stochastics up, and looks where it bounces off of right at 20. You get a little bit of a pop and then look up, almost bounces off right at 20, and actually double bottoms on the slow stochastics, which you can have double tops and double bottoms on your technical indicators. Absolutely. And as you see, it comes back up and it breaks above this resistance right here and has another awesome run. So would I be buying it now? I don't know. It's hard for me to answer that, objectively. I could tell you that I do think it still has room to run, but it's really hard to trade right now after being up a couple 100% for the year. Right. So I know that was kind of a wishy-washy answer, but you have to come up with your own trade plan, come up with your own risk basis. If I were to trade this, stop loss would probably be somewhere around 12, right? Because that's just kind of the bottom of where all this nonsense is going on. I'd like to see the RSI start to trail back up, because look, you tapped a little bit above 70 and got kicked right back down, and look, it made a lower high right here. So that's a little bit of a bearish sign, a little bit, right? It could definitely overcome. Okay, I want to talk about one more thing, and then I'll open it up for questions. I just wanted to talk about the market as a whole. Get rid of some of this crap. So if you ever want to know, how to see how the market's doing as a whole, like I always said, just type in /ES, and you don't have to go to Futures Trader up here. I just do. You can do it in Active Trader. All right, just /ES. Oops. /ES. This is the E-mini S&P, which is the way to trade the future contract for the E-mini. And the S&P, the market overall has just been a beast, right? Just a beast. So I'll tell you, days like this are not necessarily good days to start new positions, right? But they are excellent times to look at the stocks you've been watching and plan a position for the next day, because with 3 out of 4 stocks following the market, there's a good chance that your stock got that you've been watching got smacked down on days like this. And if the next day starts off fairly decent, then it's a good time to get a really cheap price on the stock you've been watching for a while, and then hopefully continues up with the market. So it's just a little bit of a tip how to gauge the market overall by using the E-mini S&P future. All right, everybody. So that's all I had to present. Questions, go ahead and open it up. You can either use the chat or, like I said before, let me get this drawing off. You can go ahead and use this little icon right here and raise your hand. All right, so it's up to you. So just go ahead. If you got any questions, let me know. I'll be silent for a minute. Let you go ahead and fire away.
Hey Ryan, what's the blue looking EMA line on the /ES chart telling?
This blue line right here.
Yeah.
Let me take a look. I don't even know, because Futures Trader, I don't really use Futures Trader. So this is kind of the default settings, but let's take a look and see what's on it. Open interest, which actually is not even, so open interest applies to options. That means how many people have an open option contract on the call side, right? So on the
Okay.
bullish side. So really, it doesn't really
Don't
tell you
worry
a
about
whole
it.
lot. Yeah, don't worry about it. It doesn't really tell you a whole lot. Open interest can tell you a lot of good things for options. It tells you how many people, the gas, right? The give a crap
Right.
factor for
Oh,
options, right? But yeah, it doesn't really do much for you for this E-mini S&P.
okay, great. Thank you. And one quick question while you got me on here. I was wondering, with the first one, the GSUM. So basically, for this week, just kind of keep your. If we haven't made a position in that one, you mentioned just kind of keep an eye out for an entry. But you mentioned something about having to call in to like I use TD Ameritrade to actually make a limit order.
Yeah. So, Aaron, unfortunately, this one's a little bit different. It's and it may not be applicable anymore.
Okay.
So you may be able to buy it straight from the brokerage, but it was relatively new in the United States, as you see right here where it says Class B shares, right? That's their B shares that they present in the United States rather than internationally. So you may be able to buy it, but if not, yes, you do have to call the brokerage to actually buy this one. And it happens. Some of the foreign restricted stuff, when it, or even some domestic stuff that is new. Some new IPOs, some new Reg A issues, which is like issues that don't really follow all the SEC rules because they're relatively small. Some stuff like that you actually have to call in for. Now, as far as an entry, yeah, so this would have been the opportune time to get an entry right here. It's a
Yeah.
little high above the 40 EMA now. So for me, If you were not in this yet, it's not necessarily the time, a bad time to get in it. But maybe you start yourself a small position, because remember, swings you should be building into. So you could start yourself a small position, and just in case it pulls back significantly back to the 40 EMA, yeah, you're going to be down about 70 cents. But if you start like a quarter size starter position, right, and that way, if it starts to trend up, right, you're still in the money. And you can add some shares, especially when it starts to break this $13 area, right, which is going to be its resistance. But if it pulls back, then you can add some more shares, right? You can add another quarter position if it pulls back to the 40 EMA, and then let's say it pops again and pulls back again, you can add another quarter position, right? And that's kind of how you build in the swings. Swings, you rarely want to be all in or all out, because they take so much time. You don't want to get what we talked about earlier. You don't want to get whipsawed, right?
Right. Thanks.
No problem, Aaron. Anything else?
Yeah, I was just thinking the same thing about Kodak. Maybe looking to make an entry on that one. It's not too far off, about 40 cents, but
it's not. Let's go take a look. Yeah, definitely not too far off. I would just, I really would like to see some more volume on this.
oh yeah, I just saw that.
This is great, and this would have been a great time for an entry, right? As I showed you, bottom of here, 40 EMA touches, and the RSI goes above 70. All that kind of the perfect storm right there.
Mm-hmm.
But I still don't see, the volume. It's obviously not going to be where it was when they announced the blockchain, right? But I at least like to start seeing trending back up. But yeah, you're not in a bad position for an entry right now. So if it starts off strong tomorrow, could be a decent buy. If it starts off weak, try to wait for that 4-day EMA bounce, right, to get yourself a really good spot.
Cool.
All right, let's go to Sam. You have the floor, buddy.
Oh, just a quick question, right? How are you doing?
I'm good. How are you?
Okay. Should you trade the RSI and the slow K at the same time, or is it good to watch them separately?
Well, Sam, that's a good question. It's good to watch them together, but I will tell you this. You will never, so when you're scanning, you will never have, let me draw just to reiterate this, right? You will never have RSI greater than 70 and slow stow less than 20 at the same time. It's physically impossible, right? Because look, RSI and slow stow trend each other. They just trend each other on a little bit of a different equation and a little bit of a different time frame. But look, when RSI is going down, slow stow is going down for the most part. And when RSI is going up, slow stow is going up for the most part. Now, slow stow is going to react a little bit slower, right, than RSI. So when RSI starts to peak up, slow stow might still be kind of pointing down a little bit. But when you see them both start to fire in the same direction, that's when you really get some decent gas behind something. But just from a scanning perspective, you can never be looking for both of these at the same time. It's physically impossible, right? It's mathematically impossible.
Mm-hmm.
Does that answer your question, Sam?
I think so, but let's say the RSI is real high and the slow K is low. What do you think?
Well, you have to find an example. It's not really.
Oh, okay.
It's not really possible though, because Sam, they both measure the same thing, like in it relatively. So RSI is looking at the strength of the stock compared to its peers on a 14 interval time frame, and slow stow is looking at a similar thing, just a little bit different of equation over a 20 time frame. And I've just found that for strength plays, that RSI is an accurate indicator, and for pullback plays, slow stow is an accurate indicator.
Oh, okay.
You can't really use them together. You can definitely look at them to see if they're both making sense and confirming your thoughts. But you're never going to have where they both meet your criteria at the same time. It's kind of impossible.
Yeah, I see what you mean, right? So if the stock is really shooting up, the RSI is more important. If the stock is coming back, the slow K is the more important.
Absolutely. And that even goes for scanning, right? So let's go back to let me get off drawing. Let's go back to the futures. On days like this would be a good day to look for slow stow plays. I'm not going to say unfortunately, but the market has been so hot that slow stow plays are few and far between.
Okay.
Right, right, because the market is so ridiculous that that's a lot of stocks can't even get slow stow 20.
Mhm.
But on days like this are great days to look for slow stow 20 plays of stocks that are not going down for any reason other than that the market's getting, it's getting the crap beat out of it that day. Right. And then because then if 3 out of 4 stocks follow the market that stock gets a crap beat out of it for no reason. Well, then when the market rebounds, like it did right here, right, this is just ridiculous. I've never seen anything like this in my life. But then that stock should theoretically follow it back up as well. And you just got yourself a great entry.
Yeah. Okay. Thank you, Ryan.
You're welcome, Sam. All right, Dan. There you go, Dan. I got your microphone on. You're good, man. Go ahead.
So I put 2 questions in the panel. The first one is, you had HTGM on Friday and it's not on your watch list on the left. Can we touch on that in 20 seconds? And then what should we expect tomorrow with the government shutdown?
Well, yeah, that's a hell of a good question.
HTGM.
HTGM. So the reason why it came off the watch list is because they did a stock offering. And this is right here, right? And as much as I try to protect you guys with offerings and things like that, sometimes they just happen, especially with biotechs. Now, it would be very, very rare for a non-biotech on my watch list to go through an offering, because non-biotechs typically don't do offerings when they are flush with cash. Biotechs a lot of times take advantage because biotechs don't make money for the most part, right? Biotechs only make money if they finally get a drug through the rigorous and crazy and expensive FDA process, or if somebody like Pfizer sees great potential in their company and they want to buy the company out. That's the only way that biotechs make money. So the only way that the stocks even move in biotechs is all hype. It's all hype, right? It's all going to be, if they don't have a profitable product, it's all going to be, is this stock going to be worth something one day? Some people buy these stocks just thinking that hopefully they'll get a buyout, because if somebody buys a stock, they're not going to buy it at $3.29 a share where it's at now. They're probably going to buy it around $8 or $9. So they're hoping to get that gap, right? If the stock gets bought out. Some people trade biotechs just like that. But yeah, it's off the watch list because they did an offering and there's not really anything really hot going on with it right now. So it's kind of over with. They diluted their supply and there's no new demand. So just from a supply and demand perspective, it's not, in my mind, it's not really going to be anything decent, at least unless they put out some kind of new news. Right?
Yeah.
And government shutdown. So let's take a look back on the /ES. And let's see. All right, so here's how the public so far is responding to the government shutdown. Futures trading starts on Sunday evening, right, and runs till Friday evening and trades 24 hours a day, with the exception of a little bit of a close for about 15 minutes to 45 minutes in the afternoon, just to kind of catch up on the market maker books and do any maintenance on the system, right? So here's your response right now, live time to what's going on with the market. So you had the gap down, and then look, you got one, and then look, lower high, and then now a little bit of a downtrend. So people are not liking it so far. So you can't really tell or predict what is going to happen when something like this happens, especially with as crazy as this, how different this presidency has been, how different the public response is to everything. But you can look at the price action after something's announced and see what the response is. And so far, the response is not very favorable, as you can see by this gap down. Now, gap down, and then so you gap down all the way to here, and then this little pop right here is nothing. it's just a little bit of profit taking. There's people who probably shorted this up here that took profits down here. And when they take profits, they're buying to cover, and their buying pushes the price up. And look, it gets smacked down pretty much right at the bottom of this. Now it was support and now has become resistance. I'm thinking the market might not be that great tomorrow. Now, hopefully, if something happens overnight, maybe in Europe or somewhere in Asia or something, that the U.S. markets follow the European and the Asian markets. So sometimes a decent run over there can counteract what's going on over here. But so far, Dan, it's looking like that people are not liking the shutdown. Right, but a good thing to check in the morning, buddy, is just when you wake up, before you do anything, type in that /ES and see what the sentiment is, right? Because that is your S&P 500 future. That's what people are trading when overnight, when they're bored and there's nothing else going on, and because they think the overall market is going to do one thing or another. So it's a really good way to tell what people are thinking, especially overnight.
Thanks, Ryan.
No problem, buddy. All right, Sam's got another question. Let's go to Sam. Hold on, Sam. Let me get you unmuted.
Oh, I'm sorry, Ryan. I didn't.
Okay. You know all the questions, Sam?
No, I know everything. I'm a genius.
Gotcha. All right, everybody. I'll give it a last couple minutes for questions. Fire away if you got anything. If not, we're going to go ahead and shut her down. All right, just 1 second, guys. I see you guys typed some the questions in the box. Unfortunately, they weren't popping up for me, so sorry about that. I'll have to see what's going on. Usually they pop up. So just making sure that I got all your questions answered.
You've answered them all. I was the only typist. You got them all.
Okay. Got it. Okay, everybody. So these webinars, so here's a few things coming, improvements to the service. Number one, we're going to start and it's going to take me about a week or two, technically wise. But we're gonna do a login area for the website, which is going to be cool because instead of you'll still get your watch list in your email, you'll still get your video watch list in your email, you'll still get your invitations for this in your email. So nothing will change there, but the difference will be is that you'll actually be able to get on my website and see an archive of all of the video lessons, right? So the video watch list. So if you miss one or something, or you're like, damn, he said something in the one yesterday, but I don't have the email anymore, you could actually just go log in and take a look at it. And then number two is that you'll be able to see all your personal stuff that you have on there. And then anything else I add, right? So I'm working on a couple other things, a couple, pre-recorded videos and stuff like that I think will really help people. So whenever I upload stuff on there like that, and then I'll let you know and you can log in and get there. So I think it'd just be a good place to keep everything together. So that way, you kind of go to one source and look for, archive stuff. A copy of this group webinar will be on there as along with all the other ones that we're going to do in the future. Will all be on there for reviewing if you want to. So just a little bit of improvement. And with that, we're going to go ahead and shut it down. Look forward to sending you the watch list in the morning. And everybody have a good night. I appreciate your time tonight. All right, take it easy.